The United States has a debt problem, AI hyperscalers have a debt problem, and Americans have a debt problem. Let me explain. The United States, we just crossed $40 trillion in debt, or 126% debt to GDP. And there's an argument that that GDP is overreported and that the numbers actually look worse than that. Of the $40 trillion, $2 trillion is an annual deficit, and $1.15 trillion of that is in annual interest payments alone, or $3.3 billion per day in interest. The 20-year treasury is sitting at 5.25%, and the bond yields keep rising. And why is that? That's because nobody wants our debt anymore. Even our most loyal purchasers of our debt, other countries, they are no longer purchasing our debt. In fact, most of them are selling. So Scott Bessent, he wants to stop the pain by expanding the treasury buyback balance up to $4 billion per week. And this is going to run from September 9th to November 4th of this year. The goal is that they're going to buy those thinly traded long-dated bonds, and they're going to sell short-term ones to cover the difference. Their attempt is to keep the coupon auction size relatively flat, and their goal, control the yield curve without issuing any additional debt. They say that if this doesn't work, they're going to tap their $950 billion Treasury general account to fund the operation. For those that don't know, the bond market is known as smart money, and smart money calls bullshit. Okay, so now for the hyperscalers. Micron, SanDisk, AMD, IREN, NVIDIA, etc. all down this morning. Some of them over 10% drawdowns in the first couple minutes of the day. This was initially concerned over NVIDIA suggested that it's going to be raising its prices as they have incurred increased costs. But I don't think that's necessarily accurate. I think it dropped after it was found that there are 9 tech giants that are carrying over $3 trillion in off-the-balance sheet AI debt obligations. They have over $1.9 trillion in purchase commitments. This is known as paper economy, and they have $1.2 trillion in leases that have been pledged but not signed for. This all comes onto the backdrop that the Fed will not be cutting rate at their Jackson Hole meeting, which we'll find out more about on Friday. And they're likely going to be staying unchanged. They can't afford to raise rates. We certainly can't afford to cut rates. So we're likely going to be holding steady. Hence the tug of war that's going on between the Fed, Kevin Warsh, and Scott Bessent from the Treasury Department. So if we can't turn to Treasury bonds, where do we turn to? We turn to the corporates. And these are these corporate bonds that are getting more love than the treasuries right now. We do have some speakers tomorrow on Tuesday, but Wednesday morning we do have PCE, we have consumer spending, and GDP estimates for Q2. Currently the forecast is for 1.5%. Wednesday after the close, we have NVIDIA earnings, and then we have MRVL earnings on Thursday. And then we have Kevin Warsh giving his speech from the Jackson Hole Symposium on Friday. Everybody have a wonderful day. Peace and love.